Hi, everyone. Today, let's talk about the Berkshire Hathaway annual meeting. Then let's talk about the Fed balance sheet, followed by Max Payne, and the economic and earnings calendars. Then we'll get into the charts. Then we'll go over my results for the week and my thoughts and positions going into Monday. Don't forget to check out the Patreon and the Twitter linked in the description. And if you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So looking at the Berkshire Hathaway annual meeting, this was a 7-hour and 45-minute event, so obviously we're not going to go through that much of it, but I did want to highlight Warren Buffett mentioned that he did not think there was a threat to the US dollar as the world reserve currency. He just doesn't think that there's a good competitor and that the dollar will be able to maintain its position. In terms of the banking crisis, he's still very bullish on Bank of America and intends to hold his position. He also mentioned that cash is not trash. They have $130 billion on their balance sheet, and that the Federal Reserve also has $2.2 trillion in cash, meaning that cash right now is still not trash. But he also mentioned that US-China relations have been awful and that both sides are not doing the right thing. And lastly here, I do want to highlight that he was a net seller of US equities in first quarter. They sold $13.2 billion worth of shares and only bought $2.8 billion. So net, he sold over $10 billion worth of shares in Q1 of 2023. Moving over to the Fed balance sheet, you can see we peaked out here in April of last year, just short of $9 trillion. We had this bump due to the regional banking crisis and their lending facility, and they have since been selling off assets quite quickly, potentially even faster than what we saw moving down throughout last year. And right now, as of 3 May, we're at $8.5 trillion, which is the same level that we saw going back to January of this year. Moving over to Max Payne here, this one's a little bit interesting. You can see the highest put strike is actually down here at 340, and zooming out here you can see that 335 and 340 puts down here, 36,000 of those. Not a lot of puts near the money, and then a bunch of calls just above where we are. Call ratio still at 1.6. But that seems a little bit skewed because there's so many puts so far out of the money here. Definitely interesting to see. And then zooming back in, you can see 410, 416, and 422, all pretty high calls. Don't expect to get above any of those on the close for this week, which would not present a lot of upside based on closing prices. And you can see there's just not a lot of puts here near the money. So to me, that seems like we might be going lower this week. Certainly doesn't have to happen this way, but keep this in mind as we look at prices throughout the week. Moving over to the earnings calendar, there's nothing important on Monday. Looking at Tuesday, not really much there either. Looking at Wednesday here, this is the heavy hitter for the week. CPI, core, and headline. Core expected to come in at 5.5, which is a 0.1 step down from the previous read. Headline expected to stay flat. Month over month expected to step up a little bit. If this would come in lower, that could be pretty bullish for stocks, so we'll see how that plays out. And I wouldn't expect stocks to make a huge move before the Wednesday CPI read. Looking at Thursday, we have core PPI, jobless claims, and headline PPI. And you can see a pretty significant step up from the previous forecast on month over month, minus 0.5 to 0.3. That's interesting as well. And then looking at Friday, not much here. We do have Michigan consumer sentiment, as well as an FOMC member speaking, but otherwise not much. Looking at earnings for the week, you can see here, Monday, Berkshire, PayPal, Tyson Foods, Lucid Motors, not too much. Looking at Tuesday, Duke Energy, Airbnb, Occidental Petroleum, Electronic Arts. And then looking at Wednesday, we have Disney and Wynn Resorts, fairly interesting. And that pretty much wraps up the week here. And we've really knocked out pretty much all the big earnings for this season. Moving over to the charts, starting with the S&P 500 on the weekly chart, you can see we're still in this kind of channel. We're right in the middle of that range. We tested this trend line just like we tested last week. This is a hanging man candle, so it's a little bit more bearish, but certainly could hold this level and start to move higher. We've been sideways for 3 weeks. Last time that happened, we ended up having a little bit bigger sell-off. Momentum also stepping down, fairly interesting. I also saw this thesis where this bottom trend line could mark a potential stronger support line, and it did mark these previous highs and then this previous low. So if this trend line holds and we we do move higher up to 42.50, that would be super bullish. And if that level breaks, then we're probably going back up to the August highs, right around that 4,300 area. So keeping an eye out on that. If this bottom trend line breaks, however, and we start to move back lower, we have an area of highest volume right around that 4,000 or 3,950 area. Moving over to the daily chart here, you can see we're still in this bull trend. We're above all the EMAs and SMAs, and you have to expect that this is potentially setting up to go higher. Daily momentum also stepping towards bullish. RSI right at that SMA, but if it breaks through here and goes higher, maybe we look overbought conditions, starting to look at 418.12 as your next upper resistance. We do have 414.69, but based on this move on Friday, I'm really looking for a retest of that 418.17 level. This was a pretty clear island reversal, so we moved down, gapped, exhausted, and then gapped back up, and then rallied super aggressively. We also have this trend line here that I didn't have charted before, but I definitely should have. And you can see we gapped right to that level and then rallied throughout the day. There's certainly some overhead resistance at this point, but to me, this says bullish going into Monday and Tuesday. Moving over to the NASDAQ, not too different from the S&Ps, but definitely more bullish. You can see we did get a bullish candle on the close. We have those wicks to the downside, retesting the 9 EMA, continuing to hold this trend. We're now above the 144 EMA as well. Looking to my next upper resistance on the weekly chart at 13,476. So looking bullish going into the next week. Moving over to the NASDAQ on the daily chart here, you can see we're right at that trend resistance. We've been watching this trend for a while. If this breaks, though, we could definitely see another 10-point move or so up to 332. So quite a bit of room to the upside if this area breaks, and it's certainly possible based on this previous trend established. And then just behind that, we have 334, which is the August high here on the NASDAQ. So certainly some strong possibility that this could break out. We're above all the EMAs and SMAs, already tested the 9 EMA, found strong support, momentum moving bullish, RSI moving bullish. And you can see that area of highest volume in this zone as well, definitely indicating that this is a potential springboard area for some more bullish pricing. Moving over to the Russell here on the weekly chart. We've been chopping sideways for a lot of weeks, so this really hasn't changed too much, but we are still holding below that 9 EMA on the weekly chart, which is continuing to push this price down. If this trend starts to hold and we start to take out these lower levels, then we've talked about it a few times, then we're probably going to come back down and retest these most recent lows at around 1650. And then zooming out here, if we take out those levels, then we have a level all the way down here at 1450. So big area of support. And if that fails, there's quite a bit of downside on the Russell. Moving over to the daily chart, still that same island reversal type setup, gap down, gap up, sitting at VWAP on the daily chart at 174.81. If we get above that level in this 175.96 level, then maybe we're pushing back up to 179.17. That would be interesting. And it's certainly possible that the Russell gets a little bit of follow through based on the other markets moving higher as well. Moving over to the Dow here, you can see hanging man, a little bit weaker. Retested the 9 and 21 EMAs. We're still above everything. We're still holding this zone and still in a wedge, waiting to see which way we break. But momentum definitely moving lower. RSI moving lower as well. If this crosses the SMA and we get a move like this, that could indicate some lower prices in the coming weeks. But right now, still holding in this range, just below this resistance line. Moving over to the Dow on the daily chart, you can see we're kind of channeling here. Kind of looks like a bull flag, to be honest. Momentum also stepping towards bullish. Island reversal setup. We're still below VWAP and the 21 EMA, plus these resistance lines here into area of highest volume. So some pretty solid resistance, but doesn't mean that this couldn't break higher and retest these most recent highs up at 343. So keep an eye on this one. Could go either way. Clear resistance, but clear momentum. Moving over to the ratios, NASDAQ divided by SPY and SPY divided by Russell. NASDAQ clear outperformance, looking to go up to 3.23, retesting these most recent highs, potentially looking to test 324 at the 144 EMA. Clear outperformance here, RSI looking strong. Moving over to SPY versus Russell, you can see the SPY is actually underperforming a little bit. The Russell outperformed on Friday, which is interesting. We've definitely seen some clear SPY outperformance recently, but we're getting a little bit of a pullback now. We also have divergence on the weekly RSI, so we we might actually see the Russell outperform a little bit. Now, these could certainly go down together, and the Russell just goes down less, but definitely something to keep in mind as we go into this week of trading. Moving over to SPY divided by the M2 money supply, you can see we actually took out the August highs on this chart. The high from August is 20.03, and then the high for this week was 20.05, so we actually just barely eclipsed it on this chart. We're still holding above all the EMAs and SMAs, and we came down and tested that 9-week moving average on this chart, and then got a pretty solid bounce there, so we could certainly see this move higher, and that is what I do have charted here. Even if this is a rising wedge, I usually expect to see that last kind of culmination breakout, which is usually a fake break, and then we start to see that come back through, which sucks in a bunch of longs and gives that liquidity to the markets to move lower. But otherwise, looking at momentum, stepping down here, RSI stepping down slightly, but still quite strong, well above the 50 line. So keeping an eye on this one. If it breaks higher, might be a bit of a fake out, but I do think it is going to break higher before we get a bigger breakdown, if we do break down at all. Moving over to copper divided by gold. This is a new ratio that I saw and I'm doing a little bit of research on. And then in orange here, I do have the SPY. And you can see they're actually fairly well correlated. They move down together. And then you have the August high here where the SPY outperformed. And you could generally tell that that was going to be fake based on this ratio, where we then came back towards it, dipped a little bit too low, rallied back towards it, and then we were basically on top of each other from October of 22 all the way up until about February of this year. And then here recently, you can see a pretty clear divergence, SPY rallying, and this ratio going lower. Doesn't mean that they have to move in the same direction all the time. You can see SPY moved much lower first while this ratio started to rally a little bit. So they can go different directions for a little bit, but generally they do come back together eventually. And there's some clear divergence to pay attention to going forward. Moving over to the bond volatility index, and then on top of that, I have the VIX here. You can see that volatility on equities and bonds generally move in the same direction. Equities obviously more volatile, but they are both rising together here pretty much up until November of last year, rallying and falling together. And then here recently, you can see starting in March, we have the bond index holding up quite strong, well above these previous lows, whereas the S&P 500 volatility is making new lows well below all of these lows. So clear divergence here, and if these start to come together, you would expect that S&P volatility is going to go much higher, indicating lower prices to come. And moving over to the equal weighted S&P 500 with the SPY on top of it, very similar thesis to the last one. You can see they are basically on top of each other for the last several months. And then right here in that March 15th area, you can see the SPY start to take off, and it's still holding up much higher here, whereas the equal weighted ETF looks much more like the Dow, where it's starting to taper off. It's below the EMAs and SMAs. And if this starts to waterfall off and the SPY is still holding up, it definitely seems like we'll get lower prices at some point in the future, and that this is definitely being propped up by that top 5 to 10 stocks. Moving over to Apple on the weekly chart, we said we'd talk about this on the longer time frames. Still looks super bullish here, looking to retest that August high at 176.13. If it takes out that level, then we'll look at the March high going back to 179.61. Super bullish. I expect this to follow through. We're not quite overbought yet on the weekly chart. I would expect to get there soon, but I don't think we're going to stop before we get that August high, which is about another $3 from where we are now. Moving over to Tesla on the weekly view, I just wanted to get a little bit better perspective here. So we have this kind of downtrend, fairly interesting. It does mark all the tops, but it does kind of mark this range that we're in here. We tested that midpoint and we're bouncing off that level. Seems like we're going to come back up and retest the 9 EMA, sitting up at 180.11, or at least my next upper level at 177.70 does seem possible. Momentum is still stepping towards bearish, so maybe we see another rally and then this continuation to the downside. But overall, still a big downtrend, just seeing a shorter term retracement. But on Tesla, those can be pretty violent. Moving over to Microsoft and Broadcom. Microsoft has already taken out those August highs. We're looking back to that end of March, early April high at 315. That would be another $5 or so. Wouldn't expect to stop before we hit that level. Based on what we've seen here recently, momentum super bullish, RSI getting close to overbought, but still moving higher. Broadcom, on the other hand, has had a very strong rally rally from 427.90 up to 630. Really got up to that 645 area. Still holding quite strong, still holding above all the EMAs and SMAs as well as VWAP. We did have 2 wicks to the downside here, and I would expect this to get back up to that 645 area. If we take out those highs, then we're going to all-time highs around 675, which again would be super bullish for the NASDAQ. Broadcom is actually a pretty big part of the NASDAQ, and this overall still looks bullish despite this fading momentum. Moving over to consumer staples versus discretionary here, you can see staples getting very close to taking out that 77.50 level. We did get a doji, which was an inside week, so that's pretty bearish. Certainly could see a pullback from here. We are pretty extended from the 9 EMA on the weekly chart. That's sitting down at 74.74, so get a pullback, retest that level, then a continuation. Certainly a possibility. Momentum still super bullish. But if we can't get above 77.50 here soon, it does seem like we'll probably get a pullback. Looking at discretionary, still wedging up here. We've been sideways for like 3 weeks in a row in my supply zone. Certainly looks like this is going to go lower in my opinion. We have the 55 EMA continuing to maintain resistance. But like I said, we're still kind of wedging sideways going into next week. Moving over to technology and oil and gas. You can see technology also looking at taking out that August high, moving up to 160.16, which is those same highs from March and April. If this level breaks, which it looks like it will, you can see this is a very clear trend. It looks pretty powerful. 9-week moving average continues to hold, so definitely bullish. Moving over to oil and gas here, however, this looks much, much weaker. You can see we've been consolidating in this area after a pretty powerful run up. And at this point here, this looks like a distribution getting ready for a move lower down to that 144 week moving average at 104.17. Certainly could find some support at this previous high here around 110, which did get tested here in July of 22. So maybe an intermediate level in this zone. But really, I think this is going to break down. You can see all the EMAs and SMAs and VWAP have all crossed up here. We're just kind of waiting to get that test of the longer term trend lines on oil and gas. Moving over to transports on the daily and the weekly, you can see we came up to this trend line that I was watching and stopped right at it. We're above the longer term trend line, but we're stopped at that shorter term one. We are just above that longer term downtrend line as well. So we tested that level, broke down, found support, broke back above it. And now to me, this still looks like we're going to go higher, start to take out these most recent highs up around 231.40. If that starts to happen, then I have to be looking for a push back up to the 144 EMA sitting up at 237.23. Moving over to the dollar on the daily and the weekly, we're kind of watching this 101.25 level. It's been holding, but at this point it does look quite weak. So we broke out of this range, retested, broke right back down to that level, kind of tried to move up to the 9 EMA through a couple of wicks and then got rejected. And we're right back at this level. If this breaks down here and takes out this previous level, then I'm looking back down to the 144 EMA as well as the 200 SMA sitting down at 97.98, which would be a pretty substantial down move from where we are right now, but that does seem like the most likely case going into next week. Moving over to the VIX on the weekly chart, we've already kind of talked about this, but I do want to highlight one thing here. We had an inside week on the candle with a big wick to the upside. Kind of looks similar to this move that we had down into the August high where we had a big move down, inside candle, and then we had a bigger rally out of it. Obviously not quite the same, but certainly an interesting comparison. Moving over to my positions, I ended up getting assigned on those 322.50 puts. So I have 200 shares here, plus all the puts that I had going into Monday already. And really, this is giving me a super bullish position, more bullish than I wanted to be going into Monday. So we're hoping for an up move. That would be awesome. But otherwise, I'll be looking to take these positions off pretty quickly and get myself back down to a more reasonable level. I do have one set of calls here at 325. I'll be rolling those down to cover my position a little bit better, but we'll see what we get Monday. I do think the NASDAQ is going to go higher. If the rest of the markets come with it, then we could go much higher, and that would be interesting. But overall here, super bullish in my positions, and that's not really how I wanted to go into Monday. Like I said, we had a ton of momentum on Friday, and if we get some follow through, that would be really helpful to my positions. Let me know down in the comments section what you thought of Berkshire Hathaway's comments. And definitely let me know if you think the NASDAQ is going to be up on Monday. We'll go over that on Monday and see how it played out. Definitely like and subscribe if you got any value out of this video. And make sure you hit the bell so you don't miss out on any future episodes. Check out the Patreon and the Twitter, linked in the description. But of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.